Hey traders, Raghee here. Happy Monday. Welcome to Charts and Coffee. Great to see you all. All right, let's get to it. We got a lot going on this week as far as moving the camera around. We got a lot going on this week as far as whether or not these markets are ready to just basically get back to their, I won't say normal trend, but are we going to see a recovery after last week's movement, right? Last week's movement. So let me get the Countdown Trader up here, countdowntrader.com. And one of the things that I think is for me pretty important right now is just sort of adjusting to the shorter term time frame. But one of the things that's really important to short-term time frame trading is the daily time frame. So what I think a lot of people don't know, that when I kick off my morning, I'm not looking at a 5-minute chart or a 2-minute chart or a 15-minute chart or a 1-minute chart. I am actually in the morning making copious amounts of coffee with mugs as big as my head. No, but actually what I'm doing is I am looking at the daily and the weekly chart. So over the years, I've whittled down what I'm looking for to about 5 to 6 things. It used to be upwards of 8. But what I'm looking for are certain things on the daily time frame that are suggesting the path of least resistance when it comes to what's the probability of a market moving higher or lower in any given session. And that way I can start the day with directional bias. So, the thing about any indicator, all the indicators that we use, is that they're constantly sort of processing, reprocessing, recalculating all the information in the market. So whether it's Darvis, whether it's V-score, whether it's a moving average, whatever it is, you really want to think about stacking your tools. I was just answering an email this morning, and it was a question about Darvis. And I said, look, if a Darvis makes a brand new low for the buy signal or a brand new high for the sell signal, the Darvis pattern is going to say, all right, this is invalidated. We had the building blocks. This is invalidated. So we're going to try all over again when the process is valid. So the thing to always remember is you don't want to stand on one indicator. I never have, I never will. So before I even get to the indicators, what's the JT multi doing? What are the grab candles doing? So I'm going through this checklist, right? And one of the books that I've always recommended, love the book. It's called Checklist Manifesto by Atul Gawande. Amazing book. You can finish it in a day. You'll refer back to it the rest of your life. It's a fantastic book. And it really goes through what it is we as traders have to do, which is run that checklist, which goes back to kind of the idea where one indicator cannot answer all questions in the market. That indicator is really dependent on the environment. Well, the environment is another set of measurements or a separate indicator. What's the support or resistance? That's another separate, right? So that's why I believe, multiple indicators exist and why each tool is designed for, a separate job, which reminds me of something my husband always tells me whenever he's off, getting a brand new tool for the garage. It's as if I tell him, here's a hammer, and that's all you ever need for the rest of your life. And the more handy you are, well, the more and more sophisticated your tools will inevitably become, and trading is no different. So, it's always humorous to me, when someone can look at somebody else's charts and say, oh, that's so busy. It might be to them, right? Or, that's too many indicators. What's too many? It depends on the question you want answered. So I'm not saying the more you trade, the more indicators you will put on your chart, but the more you trade, the more you'll know what to do with all the tools in your toolbox, so to speak. So, keep that in mind. Keep that in mind as you go through not only this week, but the rest of your career. And keep in mind that most of your trading is going to begin with directional bias, and the most psychologically significant timeframes are really, time frame really is the daily by far. What happened at the end of the day? That's the most broadly accepted opinion of the way the day was. Not an hourly chart, not a 5-minute chart, heck, not even a weekly. The most broadly accepted opinion, but what the markets did is the way in which daily timeframes plot and behave. So let's get to the questions. First one is, hey there, Dominic. Do I think we have continued pullback in the market for the rest of June and then possibly? So the first thing, Dominic, is I've always thought it borderline lunacy and a lot of arrogance to think that I will know when a market is going to turn around. I don't have a DeLorean. My flux capacitor is broken. No, Emmett Brown is not my co-pilot. Who the heck knows, right? I think the most honest thing we can say is, I don't know. I do know the path of least resistance. When and where the turning points are going to come in the market, yeah, I don't know. I'll let other people who deluded themselves into thinking they know that kind of minute timing. Is there historical tendencies? Are there historical tendencies we can look at? For sure. Are there pit below tendencies and end of month tendencies? Absolutely. I can look at those tendencies and see whether or not the markets are syncing up with them. That's the best we can do. So I'll tell you what, I appreciate the question, Dominic, but I don't know. And you know what? Here's the news flash. Nobody does. We can't say going into the future, this is what's going to happen. I mean, think about that for a moment, right? And so what I will say is we've had a pullback, and kudos for differentiating what a pullback is versus what a sell-off and all that kind of hyperbole that tends to take over the market. What time frame you're looking at is going to dictate your experience of the market. My longer term investing on a weekly time frame, it's been a hiccup and mostly opportunities. On the daily, we've broken a number of trends. I completely agree. So this move to the downside has broken trends, but not that different than we saw in mid to beginning of May. So if I look back and I trust the words of Dow, and this was echoed in even Darvis, decades later, is look at the trend that preceded the chop or the break of the trend. What was the environment before now? And if that was mostly up, V tops and V bottoms are actually very unnatural. They're sort of imposed on the market by geopolitical issues, by central bank changes in policy and messaging. So the question here now is really the latter. Is there a chance for a V top because of the way the market pulled back in light of what happened past Wednesday with the FOMC? And that's timing, Dominic, to your point. Is there timing we can impose on the market? Well, if we've got an FOMC on Wednesday, we always know whenever Jerome Powell opens his mouth, there is the possibility of some sort of messaging shift, and central bank policy messaging shifts and central bank policy shifts themselves have the ability to create more drama. And to your point, these more sort of punctuated reactions. And so with all that being said, I'm going to assume the market's going to continue up until I have indication that it's not. I don't think what Powell said Wednesday, when you really think about it, was as dramatic as the market has played it out to have been. I think it's way overdone, right? So let's shelve this notion that we're going to make ourselves jump through the fired hoop of being winning traders, picking the right direction, identifying support and resistance in a way that we can control risk. Oh, and then adding which day it's going to happen. I think if we can rely on monthly rhythms and tendencies, that's probably the best that we can do. But, again, Jerome Powell could take back some of what he said in the next month or week. So again, that's what I want to track. I'm not going to look at the calendar and say, well, this is when we're going to turn bullish. What happened with Jerome Powell this past Wednesday? Look at those events on the calendar. It'll make all the difference in the world for you. Okay, so hey there, James, and thank you for the question, Dominic. I really appreciate it. All right, James, hey, is Tesla setting up a 1, 2, 3? Of all the things I could look at, James, Tesla's probably down near the bottom of the list, quite frankly. And the reason for that is, I guess I have a really hard time getting too excited about Tesla because it's not tracking with the broader averages. But, one thing, let's keep this in mind. This is not a relative outperforming conversation, but, one thing that's interesting is, could this thing play catch up? So to your point, to answer your question about the bottoming pattern, that's a 1, there's your 2, there's your 3. And then now what are we waiting for? Well, look how nicely our Darvis has identified where that resistance level break has to be. So this, of course, is a momentum breakout pattern. And for those of you that are not familiar with this is a century-old pattern. It's called the Dow 1, 2, 3. I think a lot of other patterns have borrowed from this. And I think you'll find elements of harmonics in these patterns. I think you'll find elements of a lot of things in these patterns. Head and shoulders sometimes will have 1, 2, 3s. But what I love about this one, to your point, James, is that this area here is also the wave, right? I've also got the wave working in here. I've got the swing high working in here. Lot to like. There's a lot there to like. So if we're going to see Tesla play catch up, great. But I mean, realize that Tesla has been a drag on the S&P. It's been a drag on the NASDAQ. So could it happen? Yes. I think getting above not just 635 is going to be important, but really the 650 major psychological level is going to be that next level overhead that we'll have to deal with. And I would also say, James, if you haven't already, we use the trading view charts, put the volume profile on there. Again, not the histogram, but the profile, not the one that goes across the horizontal axis, but the vertical axis volume. And take a look if we can see some volume ledges. And when we're together this Wednesday for the Sector Secrets Wednesday session, 9:20, for those of you that want to join me for that, you can over at simplertrading.com/sector. I believe is the URL for that. We'll be having our live trading. We'll go into the volume profile on that, James. That could be interesting because what would we want to see? We want to see a volume ledge somewhere between 35 and 50 to show that not only is there an upside obstacle that kind of overlaps with that swing high, but that when we break through that level, there's a good push as we basically take out that overhead selling pressure. Because on the other side of that, oftentimes, is the acceleration. It's like a catapult on the other side of that occasionally. So thank you for the question, both Dominic and James. All right, next up is ACN. Sure, ACN. All right. The trend that was up, no doubt about that. It's moving sideways now. I would consider this distribution because of the width of the range. So we're talking about, this being relatively wide, but bullish, because look at the trend that was. Even though we have now transitioned to this yellow environment, my bias is going to be bullish. So whether it be another Darvis signal at the lower half, cut the range in half. This is the lower half, that's the upper half. And so if you want to buy calls in the lower half with bearish momentum, take a look. Not only do we need to see this particular level broken, that's a lot of resistance in here, isn't it? It's a lot of resistance in there. So breaking that level is going to be pretty darn important. And that's going to put you, kind of that 85 to 88 area on ACN. But the cool thing is here, even if the uptrend does not resume, by focusing on that lower half or the lower third, however you want to look at it, by focusing on this lower part, if all the market does is go to 290 or 295 or gets to 300 and fatigues, because you've bought down in here and you haven't put on a momentum trade, which I am not a fan of. I don't want you buying calls with bullish momentum, whether that be day trading or whether that be end of day trading. Realize that you've got a choice here to take profits off this table and scale out, as opposed to someone waiting for that break where they're just getting in with a lot of momentum and a higher premium for what they bought. So that's what I would say on ACN. Not trending. The other thing you want to do is take a look at where ACN is within the context of the ETF, the passive investing universe, and find out, what is trading with ACN? Is it a heavily weighted stock? in what ETF? What are the stocks is it trading with? Is there something with better directional bias? I mean, those are basic questions we always want to ask, whether we're intraday trading or end of day trading. So thank you for the question, Billy. All right, next up, Ronaldo. Can I provide analysis on XOP? The interesting thing about XOP, and I have looked at this. So let me show you what I was talking about earlier to Billy about the ACN question. Let's go over to, there it is. All right, this is what I'm talking about doing. Let's work backwards. We'll do ACN here real quick. Okay, so where is the center hanging out? With whom? CIBR, which I think is definitely a ETF right now to take a look at. There's some interesting things happening in those stocks. What else is on this list? That would be XLK. That's your tech ETF, very liquid, dominated by Microsoft and Apple. Okay, now let's do the same thing with, all right, XOP. So XOP, what we want to do, whoops, I did the wrong place. XOP, let's do the reverse of that, right? So what do we want to know about XOP? Not its weighting, right? Because it's an ETF. We want to do the opposite of that. So ACN was what ETF is ACN in and what stocks is it trading with? With XOP, it's the backwards. It's what is in XOP. My bigger problem with XOP, and I talk a lot about high concentration weighting, so I'm glad you asked about this. This is not high concentration weighting. It's not happening here. Take a look at the percentages. Take a look. So normally in a high concentration weighted ETF, you're going to see sometimes as few as the top 2, maybe the top 4 to 5, usually within the top 6, a huge amount of the percentage weighting for that ETF will exist in just a handful of stocks. Notice that's not the case on XOP. So XOP, to your point, while there are a number of names that are usually going to be in the top 15, the top 10, there's no individual stock that's going to have a disproportionate impact on XOP. So in those situations, I love where your head's at. You're looking at XOP broadly because there's no one individual name, like the way Chevron and Exxon have impact in XLE, or the way in which Schlumberger and Halliburton have impact in OIH. But this is one of those 3 energy ETFs that I absolutely love. And so, yeah, I'd be very interested in XOP, but I'm also quite interested in XLE and OIH for long positions too. But it's quite interesting is XOP is the one that's faring the best of the 3. It's the one that still has double green. It's the one that's still plotting mostly green grab candles. It's the one that's still trading above the 34 EMA on the low. And that's a little surprising to me that it's been this resilient, quite frankly. Explorers, you would think, would take it on the chin a little harder. But because it's not a high concentration weighted ETF, you'll notice it's faring a little bit better. And that's partially the benefit of not having a high concentration weighted ETF. Okay, next up is, and thank you for the question, Ronaldo. I appreciate that. As far as Chinese stocks go, Eric, so now we're talking FXI, MCHI, and even EEM, which a lot of people think is just this larger picture of emerging markets, when in fact it's a lot of stocks from China. Do I think that it's going to fare better? There's probably a 1, 2, 3 here, but not one that I like. Again, I don't want to make bets on weak markets suddenly, surging. I'd rather make bets on markets that have been strong, are taking a break, and then might surge. So I might keep my eye a little bit more closely on EWG, EWU. I know they got hit pretty hard. EWC, I like a lot. Might take a look at EWT. So what I would say in that, by the way, EWQ, that's France. What I would say is, sure, FXI, MCHI, EEM, maybe, down near the lower half of the range. So do the same thing I did earlier. Look at the range. I know this, and then just cut it in half. You can even run a Fibonacci from this high from this low to this high, and take a look at what the golden mean, 38.2, 50%. That's one of my favorite things to do. Just pull a quick Fibonacci so you know sort of the different sections of the last major move, and buy in the lower part of the section. Buy maybe in the lower, say in this case, buy below the 618. And then that way, all the market's going to do is just retrace a little bit higher, and you're already seeing unrealized profit. And if the market does move against you, it's a narrow bottom section of the range that you bought in. And you know that if we make a brand new low, you can pull the trade. And in the meanwhile, your risk is not as great because you built it near the validity of the zone. All right. So that's what I would say there on that. Again, quick reminder, we've got the Sector Secrets Mastery live trading, live Q&A. By the way, in our Mastery, we do sessions every Wednesday. And this one just happens to be the monthly live trading. But every single Wednesday, we do a 1 hour, sometimes hour and a half Q&A, weekly Q&A and watch list building. And then once a month, we have our big live trading session. But it's really just something. We meet every week. But we'll be doing our big live session this week. And then for those of you that are interested in the short-term stuff, the day trading, my day trading class is coming up this Saturday. And I've been getting a lot of questions about how different is this particular class from your last one. It's a different year. It's different price behavior. I'm having to lean on different time frames. A lot of the same types of mindset, of course. I'm not reinventing the process, but the way in which we're executing the process. So the tools are the same. We're applying them in a lot of different ways to adapt to 2021. And I shouldn't say the tools are the same because they're actually the same, but they're better. Like the $6 Million Man. We put signals on the Darvis. We put signals on the V-score. We've made a lot of improvements to those classic indicators. Calculations are the same, but you're able to see the setup and you're able to see the signal for the buyer to take profit a whole lot easier. It's a whole lot easier to look at multiple markets because we've made the signals just crystal clear. All right. So with that being said, thank you as always for joining us for Charts and Coffee. We'll see you all tomorrow. We've got a webinar on Wednesday. So if the intraday or my tools have piqued your interest, come join me on Wednesday, 8 p.m. It's a date. And until then, gang, be good to each other. I'll talk with you soon.